Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
Hi everyone, and welcome to another one of our classes here on Learn, Grow, Invest. Today we're going to learn all about investing in mutual funds, right? So it's a class that we're able to bring you in partnership with GK Mutual Funds. So I'm extremely excited to go over this topic today. I'll ask you to, of course, take a minute to share the live with someone, help them to learn about this topic as well. And of course, I want to thank you in advance for being here. Just go ahead and let me know where you're joining us from. And I'm sure this will be just a very meaningful and valuable class for you. So before I start, as is customary here, I'm going to open with a word of prayer. So Lord, we thank you so much for this day. Thank you for the ability to produce wealth. Lord, we know that you have created everything that we need for life and godliness. And so, Lord, we pray that you will just be here with us, allow us to absorb all the things that we need to learn to make the wise investment decision for ourselves and our families. Lord, we thank you for this community, and we pray that you will continue to bless us in Jesus' name. Amen. All right. So let us get started. Just, of course, just a little bit about who we are as a community, because I know we'll have some first-timers here. So Learn, Grow, Invest was founded in 2017. We're built on Deuteronomy 8:18, which says, "Remember the Lord your God, for it is he who gives you the ability to produce wealth." And so our aim as a community is just to help you to learn about investing, learn the basics of managing your money. And of course, as much as possible, those principles are going to be rooted in scripture, right? So it's a big part of our core values. It's a big part of who we are. And of course, the community was founded by myself and my wife, my lovely wife that you're seeing on screen, who is actually also producing this live stream. So both of us are here with you. And later on, we'll be joined by a member of the GK team. And feel free, of course, to follow us on all social media platforms. Just search for Learn, Grow, Invest, and you'll be able to find us. Just a little bit about just what we're built on. So the name Learn, Grow, Invest has a meaning. It's very important. So when you think about learning, we really do encourage you to be in a mode of continuous learning, right? Think of it as you're going to spending the rest of your life learning about money, learning about investing, making mistakes, and coming back better, right? And of course, those are based on scriptures. You see them there on your screen. When you think about growing, it's about personal, spiritual, emotional, as well as financial growth, right? So you're not just growing as a person, you're growing in these areas as well. And the best way to do that is in community. And we, of course, encourage you to join our community, because we have here, I believe, created a safe space for everybody to learn, right? And then finally, we always encourage you to match your goals with the right investment vehicles. And that's actually a big part of how we partner with companies like GK to bring forth this valuable class for you, so you can now evaluate mutual funds and see whether or not that's the right option for you to invest, right? So we will do this class as often as we can to help you to learn about the options that exist and to be able to match your goals. This is where I'll ask you and encourage you to join our community. We are 2,400 members strong. We also encourage you to join our mailing list. I'll ask my producer to share those links. So join us on Telegram or Facebook or LinkedIn. You are free to join us on all platforms, because sometimes the conversations are different on each individual platform. And this class is brought to you by the Learn, Grow, Invest Academy, which is where we have self-paced learning. We have our Grow Your Wealth 2022 conference that took place last year. That video is on our platform for you to be able to purchase. We have our coaching program that's a part of the academy. So there's a lot of great and valuable content there. So you can, again, look for the link in the description and check out the academy, and be sure to look out for a coaching program that's going to be, I think, going to cohort 4 or 5 January. Okay, so let's talk about why we're here. All right, so we're going to talk about mutual funds tonight. We're going to be focusing on just 4 modules. It's not, you'll find with this topic, it's not a very complex one to understand. So we don't need to go into a lot to be able to explain it to you. So I'll start off with the first 2 modules, and Akeem from the GK team will join us for the next 2. And so at the end of it, you'll have a clear understanding of what are mutual funds. I'll be starting with some investing building blocks. Akeem will be talking about goal setting and how to maximize investing in mutual funds. And of course, that's the best coming from the persons who are providing the mutual funds. So I think that'll be valuable for you to learn. And then we will talk about just taking your questions and answers at the end, just like we always do. And of course, I think the part that everybody's been waiting for, and that is the giveaway, right? So on the screen, you'll see that we're going to be giving away 3 15,000 gift certificates, sponsored by GK, of course. So here is the criteria for the giveaway, right? So you have to, for example, hopefully you would have registered, because only the persons who registered would be eligible. And the next thing that you need to do is watch the class in its entirety, because the questions for the giveaway are going to be based on the class, right? So you have to pay attention. Anything that seems like it would be noteworthy, be sure to write it down. And then when the giveaway comes, we're going to have the first one maybe about halfway through, and then the others at the end of the presentation. So we wanted to ensure that there's just added incentive to join us here today. All right. I'm going to go 1 slide before, because I have to say this disclaimer. So the information here is for discussion, education, and entertainment purposes only, as at least from the LGI side, right? Because I'm not a licensed financial advisor. Akeem, the one who will be joining us later, he can speak from that place, but I can't, so I have to give the disclaimer. So just bear in mind that anything that I say from the Learn, Grow, Invest perspective is for your education and entertainment purposes only. But of course, leave it to the GK team to answer any questions that are related to anything in the realm of financial advice, right? So that was a mouthful. Let's get started, right? There are 2 resources that you can access as a part of this class. The link again will be shared with you. These are free resources. They help you to get started with the stock market, and they help you to get started with biblical investing, right? So an abundance of resources there that you can use, and just be mindful that we try to give you as much value as we possibly can. All right. So let's start with some investing building blocks. And the very first building block we're going to share with you is the L.E.A.R.N methodology, right? So what we do is encourage persons to have a mindset and approach to investing that follows this methodology that you're seeing here, right? So the very first step is L. So you want to look at your current financial position, right? This is going to include doing a budget, understanding your financial positions. Do you have debt? Do you have a lump sum coming in? Do you have the relevant things in place to ensure that your finances are taken care of every month? And of course, this is one of those things that we help you with in terms of financial consultancy. But the very first step is to understand the state of your finances, right? Before you make any investment decision, you want to understand the state of your finances. The next is E, which is establish your goals, right? So every investment decision should be based on the goals that you have. So do not invest in anything unless you know why right? What are you trying to accomplish by investing in that particular asset class, right? The next thing that you want to do, which is A, is assess your available options, right? So attending this class is this step, right? You're learning about mutual funds. You're going to add that to your knowledge base of options to invest in. And then when you're ready to make an investment decision, you'll decide whether or not mutual funds fit the goal that you would have established the step before. All right, R is where you research your shortlisted options. So when you learn about mutual funds, if it sounds like something that can help you get towards your goal, you're going to research it a little bit more, right? So we will give you as much information as we can in 90 minutes, but you may want to do some more reading, right? When GK team shares the information about their mutual funds, see if there's any gaps in knowledge that you have that you may want to ask additional information, and just be sure you get as many questions answered as possible to help you understand the asset class well. And then once you know it well, you say, okay, I want to take that step, right? Final step, of course, is normalize investing regularly. I cannot tell you how many persons wish they just had put down $5,000 or $10,000 every single month to start investing regularly, because if you think about it, the baseline of that investment journey for you is going to be saving, right? The money has to be saved or allocated or put aside before it can be invested, right? So you want to just ensure that this is something that you're doing every single month, regardless of the season, regardless of what's happening around you. All right. So that's the first building block, the L.E.A.R.N methodology. Sounds like something that would be good for a giveaway. Who knows? But I'd write that down if I were you. So let's explain what investing is. So investing is the act of distributing our resources, like our money, our time, into something that will generate income or gain us a profit, right? It is the act of allocating resources. So when we say we're investing in something, where we are allocating something, right? Money, time, expertise into accomplishing something, right? So investment requires a sacrifice of some present asset, and it is something that we're hoping that at some point we'll have some outcome of either gain or capital appreciation or something that is of greater value than what we would have put in, right? The ultimate purpose of every single investment is to generate a return. That return varies per person. When I'm investing, I may be looking for 20% return. You may be looking for 50% return. 3 years, you may be waiting for 6 months. So it really is going to vary person to person. And again, you'll see that highlighted in the presentation as we go through, but it's just important to understand that you're investing for a return. So some other building blocks to think about, and I'm going to put this a little bit larger so you could see it. Everything starts with a goal, as I mentioned before. So you want to think about your goals clearly. If you're not sure how to articulate your goals, we have a video on setting goals here on this YouTube channel. Be sure to check it out. But you want to invest for a purpose, right? Write down what that purpose is, right? The next thing that you want to think about is your time horizon. How long can you afford to wait before you want to pull down on that investment, right? There are some persons who get concerned about their investments growing in the short term when really they're investing for the long term, right? So that's something to always have clear in your mind, because the prices of investments will typically fluctuate, right? So especially with stocks or those type of assets, the prices are never fixed. So if it's down in the short term, but you were investing for the long term, what you need to do is ensure that you're in that asset class clearly to know whether or not it's time to sell or not, right? So your time horizon is going to be extremely important, and you shouldn't make any investment decision without factoring that in. Next, you want to think about asset allocation. Now, this is your overall investment position, right? So if you think about it, and I like to use our example. So we invest in stocks, we invest in real estate, we invest in companies actually outside the stock market. So we make private investments as well, and all of it makes up our asset allocation, right? All portfolio, if you will, right? So you have to think about what that is for you, right? What's the makeup of your portfolio? What assets match your risk profile? And what does it make sense to keep based on the next point that I'm going to highlight, which is your risk tolerance, right? So how much risk can you really afford to take, right? A single person in their 20s is not going to make the same investment decisions as somebody who is my age in their late 30s with a child and who is married. I'm going to be investing differently than somebody who's 25 and also from somebody who is 55, right? So the level of risk I can take is based on the resources that I have, the life stage that I'm at, and of course, the other things that I would have mentioned as well, right? The next building block comes down to the investment vehicles, right? So you have different ones. We've covered them all on our channel: stocks, real estate, mutual funds, etc. You want to explore all of those vehicles that exist and be sure to choose the right one and the right allocation of the ones that you're choosing to go with, right? One thing to note here is that each vehicle has, I use the word limitation here, but it's not necessarily a limitation per se, but there are specific characteristics of the different vehicles, right? Yes, Akeem, I'm late 30s. Okay, I'm going to be 40 next year, right? Next, we have diversification, the final building block that we're going to share here tonight. So diversification is for those persons who want to spread their risk, right? It's more and more persons who we speak to, I find that they're not quite aware of the fact that they should be investing, for example, in multiple asset classes. That's a form of diversification. You have things like, for example, mutual funds, again, that we're talking about here tonight, that provides diversification. So it's something that you have to be mindful of. Now, there are ways to diversify. So even if you have multiple asset classes, or for example, you're investing in a mutual fund, it's going to be important that principle that I mentioned, to normalize investing regularly, because you want to ensure, for example, when you're investing in a mutual fund, you're putting as much capital as you can, because then it'll maximize the amount of returns that you get. So don't start an investment with the minimum amount and expect that you're going to get wealthy from $5,000 or $10,000, right? That allows you to start, but you don't want to keep the amount of capital invested to a small amount. And then finally, of course, we talk about this often here. You want to think about whether or not the season calls for concentration or diversification, right? And we've talked about this ad nauseum here, so I won't go into it now, but look at a video that is called "How Many Stocks Should I Own?" I talk about concentration versus diversification. That principle actually will apply to every other form of investment. All right, some facts that you should think about here. It doesn't take a lot to get started. So for example, you can start with the mutual fund account with GK with just $15,000, right? That's not a great deal of capital to get started, especially when you think about what we can really do with 15,000 locally, right? So it gives you an opportunity to start, and of course, when you normalize investing, you're gonna add capital consistently to ensure that you have a sizable amount invested, right? So fact 2 is that historically the stock market, has outperformed other asset classes. So of course, we'll get into this later. The mutual funds aren't just composed of stocks. There are other asset classes that are used to make up the mutual fund. But of course, you want to ensure that you are investing in an asset class that can provide you with the type of returns that you're looking for, right? Third is that low risk, low potential return, high risk, high potential return, which means you want to ensure that you're choosing, for example, the right fund composition to ensure that you're getting the type of return that you're looking for. And fact 4, investing for the long term produces the best results. And I'll actually tweak this one to say investing for the long term while remaining diversified may be the best result for beginners, right? So a benefit that you're going to see of the mutual fund is the fact that somebody else manages the fund for you, right? So the team from GK, they have a portfolio manager, I believe it's called. Akeem will clarify if I'm mistaken, who manages the fund for you, ensures that it's giving the best possible return. So you don't have to worry about that part, right? Your job will be to research, ensuring that, you know, over the quarters, over the years that pass, it's giving you the type of returns that you're looking for. And then of course you discuss that with your rep to ensure that it's still the right investment for you, right? So you want to invest with a long-term mindset, meaning, remember on the first slide that I said where you're going to be investing for the rest of your life, right? So that's how you want to think about it. So what you need to get started now, this is actually going to be reinforced for the next part of the presentation, but this is what you need here. Even if you're investing outside of Jamaica, once you have a TRN, you can get an account started. So it starts with your TRN, your ID, proof of address, right? They have to ensure that you have proof that you live where you say you live. Source of funds is going to be important. So the question that we often get here is that, you know, what if I'm under 18? If you're under 18, you can have a parent or a guardian open the account on your behalf. And then when you get to 18, you can take over that account. If your source of funds is your parent, then they would just have to validate that for you, but you need some proof of income, right? Where did that money that you're using to open the account come from? Next, we have 2 references. This is standard here. I don't think you open any account in Jamaica without 2 references. And then, of course, initial deposit in this case for the mutual fund would be $15,000. All right, so let's get into a little bit about mutual funds specifically. Again, that's why we're here. I'm going to pause to see if there's anything that I need to answer. Not seeing anything. The issues were resolved for persons who can't see or hear. All right, great, good stuff. All right, so here are some key terms for you to think about when considering mutual funds. I won't explain all of them. I'll just go through the key ones, but be sure to, this is the kind of thing that you can take a screenshot of to just ensure that it's there. And our Stocks for Beginners guide will actually have some of these key terms, and that's a free resource that I mentioned before. So net asset value is one of the things that you're gonna hear a lot when you are dealing with funds, and that is essentially the per share market value of the fund. You have what's called an expense ratio, and that's something that you may hear as well. You have diversification. We speak about that term, and that's pretty much just spreading your investments to ensure that you're minimizing or managing risk. There is no risk-free investment, so it's really us minimizing risk. Next, we have what's called capital gain. So when you start with your investment of $15,000, for example, as that investment increases in value, then that's what you consider capital gain or loss. So if it loses value from what you first invested, that's capital loss. But of course, there's also what's called realized loss or realized gain, and that's when you actually sell, right? We have as well what's called a yield, and that's the income generated by the mutual fund investment, and that's used as compared as a percentage of the NAV. Volatility is what we refer to as the rise and fall of market prices of asset prices. Volatility is normal. So if you have a very good asset that's selling for lower than it should be, that's an opportunity to buy. And if something is when these type of occurrences take place, we shouldn't be fearful. Again, we should just use it to trigger our research to ensure that we're making the best decision. As I mentioned before, mutual funds are actually managed by someone. So that's one of the benefits you get. And so there's somebody that's going to be responsible for managing the mutual fund, ensuring that it's giving the expected return. And then of course be the one, allocating the different assets within the fund. And then of course you learn more about that later. And then a prospectus, just like you would for an IPO, a mutual fund will typically have a prospectus as well. So you can read up on the fund, get all the details about it, and learn more in that case. So we're going to look at some benefits, and then we're going to look at some things to consider. So benefits, again, we mentioned that before. So diversification is there. It's kind of baked in, right? Anything that has the word fund is typically diversified. So it's spreading your risk. And then of course, based on the asset allocation within the fund, that will determine how that fund performs, right? Next, we have it's managed by a professional. So we have a lot of persons in our community that aren't confident in managing their investments on their own. If you're not at that place, this may be an option for you in terms of a mutual fund to look at the fact that somebody else is going to be managing that investment for you. You just have to be mindful, of course, how the fund is constructed, right? So that's what you want to think about there. And then, of course, usually with funds, you have the opportunity to buy and sell easily, right? Because you're actually doing that transaction directly with your broker and not with another investor, right? So liquidity is important. So if I wanted to, for some reason, right, because we may have a long-term plan, but we have an emergency and we have to sell our fund, then we are able to liquidate that quickly because we're doing the transaction with the company, right? So in terms of the specific turnaround time for selling it, if you should need to, you probably can pose that as a question for the GK team, but just understand that it wouldn't be the same as, for example, selling a stock and having to wait for a settlement. I don't imagine so. I may be wrong, and the GK team will clarify, right? Some things to consider. Now, this is something that you just have to be mindful of. And again, that's our purpose here as L.E.A.R.N Grow Invest. So because the fund is going to be professionally managed, you are not able to select the specific assets that make up that fund, right? So you will typically see categories, meaning let's say you have, fixed income or cash and cash equivalents and stuff like that makes up the fund, but you can't choose the type of fixed income asset that makes up that fund, right? So this may be good, again, for those persons who can't or don't have the time or the ability to manage it on their own. And not necessarily bad, but it just depends on the type of control you are desiring in terms of your investments, right? Next, because a fund is made up of different assets or a combination of assets, it's going to be subject to the performance of those asset classes, right? So that's important to understand. So what I say is that you want to be tracking the assets that make up the fund that you're invested in, right? So for example, if the fund is made up of, let's say, bonds, then if there's any news about the bond market and how that is performing, anything in the newspaper about the bond market, like those kind of things, you want to track it, because if, for example, bond rates are increasing, that bodes well for a fund that has a bond, and then that means your investment is likely to be doing well. In terms of fees and expenses, now you want to be mindful of this for the different funds. There's typically some form of fee or rate that's there. Now that may vary depending on the fund that you're working with, but that's something that you always want to find out, right? If I need to access this fund, or what type of fees or expenses are associated with that fund, right? Because it's managed by someone, there's typically a management fee or something of that nature. You just want to ask those questions to have that understanding of any fees or expenses that may impact your potential return from that fund. All right, so I believe that's it. These are my slides for later. So I'm going to go back and we're gonna take a very short break, like for 30 seconds, and then we're gonna be joined by Akeem Dawkins from GK, who's gonna go through his part of the presentation. All right, so we're gonna take a short break and we'll be right back.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
Hello, everyone. My name is Hakeem Dawkins, Retail Wealth Advisor from the Grace Kennedy team. I hope everyone is good this evening. So we're actually here to teach you guys about mutual funds, teach you about GK Capital, GK Mutual Funds, and our partnership as well. So guys, just follow me a little bit and let's see what we can do, right? All about learning today, right? Learn, grow, and invest. So with GK Mutual Funds, it's all about building your own wealth. And this is actually powered by GK Capital Management and Unit Trust Corporation out of Trinidad and Tobago. So guys, GK Mutual Funds comes from GK Capital Management and Unit Trust. So it's a very, very important partnership. So let's go through it real quick. All right. So now, Grace Kennedy and Trinidad and Tobago Unit Trust Corporation partnership actually started this year. So let's get a history of Grace Kennedy. Grace Kennedy is one of the Caribbean's largest and most dynamic food and financial corporate entity. We started in 1922, and guess what? We actually celebrated our 100-year anniversary recently, because I know you guys saw the GK 100. We have a wide reach in the Caribbean, North and Central America, United Kingdom, and also Africa. And GK Capital Management is the investment and advisory subsidiary of Grace Kennedy. We focus on traditional and non-traditional investment vehicles, and GK Mutual Fund is a FSC-approved collective investment scheme. So now let's look at our partner. Unit Trust Corporation started in November 1982 with over 40 years of experience. It is the largest mutual fund company in the region, with experienced and professional portfolio managers managing over $3.6 billion with over 500,000 unit holders. They represent 13% of their country's GDP, with distribution payment of over $1.5 billion to its unit holders. So now you guys can see that we made a very smart move with partnering with UTC. So let's get you a quick current profile of UTC. As you can see in TT dollars, they have a management of 24.6 billion. They have a market share of 38.6%. They have 9 mutual funds and 1 private pension plan. They have a team of 518 persons across 10 departments. And as I said, over 500,000 unit holders, right? And they have a retained earnings of 1.7 billion TT dollars. So now, let's see how this partnership will benefit you guys as investors. So Grace Kennedy is actually one of the Caribbean's largest food services brand within Jamaica and is highly regarded as a trusted brand. And TTUTC brings a strong track record of performance with over 40 years of investment management experience when it comes on to mutual funds, and is the largest asset manager in the Caribbean. Guys, largest asset manager in the Caribbean. And let's go over the figure. It is $3.67 billion under management. The partnership will bring a wide selection of innovative products to meet the needs of every Jamaican as they seek to build their wealth. It is very convenient, and access to the products will be made easy with an extensive distribution network and digital infrastructure which is built out. So now, that was a lot. So when it comes down to investing, we need to focus on goals, right? We need to have something in mind that we want to do, and then we actually invest to get there. So let's look at goal setting. What are some of your goals? Do you want to buy your own home or an income property? Do you want to own a car? For example, a HRV, a Vezel, a Vitara, or even an Audi Q6? Do you want to invest to become a millionaire? And I can bet the answer is yes. Do you want to work all your life, or do you want to retire early? Do you want to start your own business? Or do you even want to have the best education for you or your child? So these are some of the goals that you might have, or even some more. So now when you have your goals, we have to kind of categorize these goals right now. So it can be short term, medium term, or even long term. For an example of a short term goal, and I hope you guys are listening, is saving for a down payment for maybe your house or even your car. But sometimes the house might not come as quickly as we want, so that might push it over to a medium term goal, right? But also for short term, you can even plan on going on a vacation, which we all love to do. So when it comes down to medium term, as I just mentioned, home acquisition or even paying for that lovely wedding. When it comes down to long term now, is retirement savings and investing, and even planning for your children's education. So now let's compare savings versus investing. So savings is suitable for short-term goals and emergencies. The insured amount of the principal is safe. It is low risk, which comes with low reward. For investing now, it allows you to accumulate more in a short to long-term period when it comes down to your goals. It gives you a higher average return than cash assets. You're able to beat inflation, and right now inflation is beating us at 6.4%. But in investing, it allows you to have a vehicle that can maneuver and beat inflation, so you're actually coming out on top at all times. It allows for potential for capital appreciation, and we always want to see our funds growing, right? When it comes down to investing, we are exposed to fluctuation, which means the volatility of our account. So one day you might be up, the other day might be down. But when it comes down to investing, we have to always think of the goal in mind and not constantly watch the dollar. So now let's compare saving versus investing. Let's say you invested $500,000 in a savings account, and after tax of 0.62%, you're getting $2,325. You wouldn't want that from a savings account. You think you want to get more, right? So imagine if you're now investing with GK in our capital money market fund for a year at 5.25% after tax. That is 26,250. I don't know about you, but 26,250 sounds a lot higher than 2,325, right? So when it comes down to us, I want you to look at our mutual funds and get with it so we can ensure that your money is performing way better than the bank account. But one thing I want to note is that the interest is tax-free after 5 years if the amount invested each year does not exceed 1 million. So let me repeat, interest is tax-free after 5 years if the amount is invested each year does not exceed 1 million. So now, when it comes down to investing and everything, which might be easy for some and hard for some, it's all about planning, right? You have to have a financial plan. A financial plan actually starts with a budget, and a budget is simply telling your money where to go without it telling us where it wants to go. When it comes down to breaking down your budget, it is recommended that you actually break it down into 3 categories. So you have needs, wants, and savings and investing. So we actually recommend 50% towards your needs, 30% towards your wants, and 20% towards savings and investing. So where many of us fall short is just saving and not investing. Many of us may put money under our mattress in a savings account or whatever, which is not giving us anything, right? But while saving is good for a rainy day when it comes down to emergencies, investing with the right allocation through a GK mutual fund wealth advisor will ensure you have a surplus of umbrellas for rainy days to come. And investing is pretty much using your money earned from working to purchase a day in the future when you don't have to work. So now let's look at some investment risk, because we know we have high risk, low risk, and medium risk, right? So let's look at these risks. Now we have market risk. Market risk actually speaks to the fluctuation that you may incur on your account due to adverse changes in prices, right? So that is simply like, for example, stocks. You know that your stock can be valued at $10 today and that is valued at $8 tomorrow, right? And that is just the appreciation or depreciation of your account, but that's a realized loss or gain. Now, let's look at liquidity risk. Liquidity risk speaks to the inability to get quick cash from your investment, right? So for some instruments, it might take a day or two, which is relatively quick. When you step into liquidity risk now, when you have to wait maybe a week or two or even a month to liquidate your position based on the instrument that you're in, right? And then you have default risk. Default risk now is when it comes onto bonds and so on, where the borrower is unable to pay the interest that they guaranteed you in the beginning, right? And then you have lifestyle risk. Lifestyle risk now mostly falls in our lap. We're in a situation now is the more money you make is the more money you spend, right? All of us are guilty of that. You might be in a position where you're earning $100,000 a month, and then after that, yeah, you have your expenses of $80,000 a month, which leaves you with $20,000, right? And then you get a promotion, you go to $150,000, and same time you move your expenses from $80,000 to now $130,000, which leaves you in the same position, right? So what we have to actually do when it comes down to the risk that we can manage is to ensure that our funds are managed properly. We have to ensure that we have our goals in mind, the timeline in mind, and stick to it. So even if you get more cash, it is recommended that you allocate that cash towards your investing and savings. Do not be a victim of lifestyle creep. So now let's look at what is a mutual fund. And it is an investment vehicle that pools investors' money into a single fund. This is then managed by a fund or portfolio manager. And in a mutual fund, investors purchase shares in the fund where each share represents a fraction of the total pool. So let's go back to the first one real quick. When you say the funds are pooled, how it benefits you with the pool funds is that we are purchasing assets that are not readily available to regular investors, because you have regular investors and you have accredited investors. So an accredited investor is someone who is able to purchase an instrument of 10 million or more. But investing in a mutual fund allows you to get a piece of that instrument, which is generating the same return. So you're pretty much being able to play with, quote unquote, the big dogs in the market. So when it comes down to mutual funds, you're right up there with them, right? So now let's look at the characteristics of a mutual fund. It provides you liquidity. You have income tax benefit. And remember, 5 years. Portfolio is professionally managed. It provides you with diversification. It is regulated. It is very convenient in purchasing. Like you can just walk in, open your account with us, say you want to purchase the money market, and then it is right there and ready. It's not like you're going to have to wait weeks or months to get in. The investment is very flexible and it is of low cost. So now, let's give away something. Because as Jermaine said earlier, we have some gift certificates to give away, right? So for the first question, right, I want you guys to literally type in the chat the answer, and then you'll be given your gift certificate, right? So the question is, can you name the categories of goals with short term? Remember that one? And the things that fall into those categories. So the three categories and what falls under those three categories. So go right ahead, guys. So, Andre, your answer is correct. So I have one question for you first. Are you registered for this class? If so, you are the winner of this gift certificate. So talk to me, Andre. Are you registered? Andre is registered. So congratulations, Andre, on winning the first gift certificate of the evening. So let us jump back into learning about mutual funds. So you have three types of mutual funds that we at GK offer. We have the Jamaican Dollar Money Market Fund, the Jamaican Dollar Growth and Income Fund, and the USD Income Fund. So before we get into the funds, let's find out the stage of investing that we're at. So we have the pre-career, which is 18 to 23, the early career, which is 24 to 38, your prime earnings career, which is 39 to 49, the pre-retirement years, which is 50 to 60, and retirement years of over 60. So for investors who are between 25 and 45, it is recommended that 40% of your portfolio should consist of equity-based products. This gives them time to ride out market volatility to generate high returns. So for example, we went through COVID, which drastically impacted the stock market. But if you are within the age range of 25 to 45, you do have the time to bounce back, because as we know, the stock market will always bounce back, right? So for the remaining 60% of the portfolio should be focused on retirement, which 35% is there, and then the 25% is fixed income securities for guaranteed returns. So this allows you to have a properly balanced portfolio. So for investors who are between 45 and 60, so which is a part of their prime earning careers going into pre-retirement, their portfolio is actually supposed to be, which is well recommended, to have 40% focus on their retirement, right? Because you're getting very close to that point in your life. This focus allows you to maintain your earnings as you get closer to the actual age of 60. And then the remaining part of your portfolio, 35% should be allocated to fixed income for liquidity needs, and 25% allocated to the equities for growth opportunities, right? And then for investors who are over 60, it is recommended that 65% of their portfolio should be geared to fixed income securities. This is primarily to generate consistent and guaranteed returns as their working years have come to an end. And they can allocate the remaining 35% to equity for growth opportunities, right? So now let's look at the GK money market fund, right, in Jamaican dollars. The initial investment is $15,000. And as an Andrea who won earlier, you are actually going to be given the gift cert for the Jamaican dollar money market fund, right? And subsequent investments after the initial one is 1,500, guys. 1,500, we can find that. We can invest that with GK, right? The assets include short-term, highly liquid corporate notes. The earnings received by the fund are tax exempt after 5 years. We provide competitive returns while preserving capital using a diversified portfolio of high quality interest bearing assets. You get monthly statements. The NAV is published daily. This is low to moderate risk, and the minimum holding period is 30 days. So let's jump into the Jamaican dollar money market fund real quick. All right. The inception was March 2023. Right. Our strategy for the fund is to preserve your capital and maintain adequate liquidity. The asset classes are fixed income, mutual fund, and cash equivalents. Right. The average portfolio yield for 12 months estimate is 9.57%. The gross asset value is 334 million Jamaican dollars. The average time to maturity is 2 years based on the assets that we have, and we have a number of 19 securities in this portfolio. And you can see if you look to the right, it says we have 80% allocated in fixed income securities, while 20% is for cash and cash equivalent. And if you look lower, you see the top 5 asset allocations for the money market fund. We have a bond for 2024 of the BOJ at 8.15%. We have a fixed deposit with First Global Bank. We have one with Jamaica Mortgage Bank at 12%. We have a L.E.A.R.N trading note, which is secured at 12.5%. And then we have one with Victoria Mutual at 11.25%. So that gives you guys the composition of the money market fund, right? So now let's look at the growth and income fund. Similar initial investment of $15,000, subsequent investment of $1,500, just like the money market fund. But this now has a balanced portfolio that actually allows us to mix fixed income securities and stocks. So it's generated for growth and also income. Earnings received by the fund are tax exempt after 5 years. We provide competitive return through appreciation and current income over a medium to long-term investment horizon. The reason why we say medium to long-term, because once you're investing in stocks, it's not a get-rich overnight scheme. Stocks is years and years, right, guys? And then, as I said earlier, we provide monthly statements. The NAV is published daily. This is for moderate to high risk, and the minimum holding period is 90 days. So just like the money market fund where I gave you guys the allocation, let's do the same for the growth and income fund. This one was also started in March 2023. We actually seek to have capital appreciation and income from quoted equities, right? That is our strategy, right? The average portfolio yield estimate for 12 years is actually 7.66. The gross asset value right now is $320 million, right? The average time to maturity based on the assets that we have is 3 years, and the number of securities is 32. For the asset allocation, we have right now 18% in equities, 63% in fixed income, and 20% in cash and cash equivalent. So the top 5 asset allocations right now is a Victoria Mutual Investment Bond, which matures in 2024, which is paying 11.25%. We have a fixed income with First Global Bank. We have a Government of Jamaica bond, which is maturing in 2037, paying 10%. We have a L.E.A.R.N trading note at 12.5%. And then we have a BOJ 30-day CD that matured yesterday. All right. So now let's look at the USD income fund. The initial investment is $1,000 with subsequent investment of $100. Primary assets are dominated in US dollars, right, guys? The earnings received by the funds again are tax exempt after 5 years. We aim to provide competitive returns while preserving your capital using a diversified portfolio of interest-bearing securities. Again, you get monthly statements. The NAV is published daily. This is moderate risk, and the minimum holding period is 90 days. So now let's look at the breakdown of the USD income fund. Again, started in March 2023. Our strategy is to invest primarily in USD fixed income securities. The average portfolio yield for a 12-month estimate is 7.13%. The gross asset value is $20.9 million US dollars. The average time to maturity is 1 year based on the securities that we have, and the number of securities in this portfolio is 35. If you look to the right, you will see that 48% is actually in fixed income securities, while the 52% is in cash and cash equivalent. So now let's look at the top 5 again. We have a US Treasury bill matured in January 2024. We have one that is actually maturing on the 9th of November of this year. And then we have another Treasury bill that is actually to mature on the 19th of December. Then we have GK US dollars, right? And then we have a Government of Jamaica bond maturing in 2025, paying 7.625%. So guys, that just gives you a quick breakdown of the allocation of the funds. So now let's look at our performance, right? Our year-to-date performance on the money market fund is 4.68%, but the benchmark is 4.59. The US dollar income fund performance is 2.59 against a benchmark of 2.38. And the growth and income fund is now performing at 0.61%, but the benchmark is 4.08. But as you can see, the last 3 months, we're looking at 2.4% for the growth and income fund. 3 months for the US income fund is 1.99, and 3 months for the money market fund is 1.49, right? But now let's go at a quick overview of the funds, right? As you can see, guys, they were all started in March of 2023. The benchmark for the money market fund is an average 6-month GOJ Treasury bill yield to maturity. The benchmark for the US income fund is US Treasury at a 10-year yield plus 200 basis points. And the growth and income is benchmark is Jamaica's inflation rate plus 200 basis points. And as you can look below, you can see the risk profile of the 3 funds. For the Jamaican dollar growth and income, it spans across moderate and aggressive. The US dollar income fund is moderate and conservative. And the money market fund is moderate and conservative, right? So now, how do you maximize investments in mutual funds, right? First, you have to choose the right investment product. You have to diversify your portfolio to ensure that you have one hand in stocks, you have another with fixed income securities, you might be able to put your foot in bonds and so on. You have to diversify, which allows you to have getting returns and also to minimize the risk that you're exposed to, and to invest systematically while including lump sums. So instead of you just putting money down today and not investing again for the next 2 to 3 years, we recommend that you invest monthly, quarterly, semi-annually, but always invest. Never you just let the money sit and you're not adding to it. because when it comes on to investing systematically, you capitalize on what we call dollar cost averaging. So if you were to buy the same thing in the market, for example, at $100 each and every time you go to the market, there's going to be an opportunity to purchase the same thing for maybe $80, maybe $60, $90, or even $105. When you consistently buy into this, you're able to get more returns as the train starts moving, right? So quick example, if you buy something today for $100 and you buy it tomorrow at $50 and then it moves to $150, you'd have gained a 50% upside on the first purchase and a 200% upside on your second purchase. That's when it comes down to investing systematically. And next thing, you need to review your portfolio annually. You need to track where you are. So now let's look at the steps to maximizing your investment using mutual funds. You have to consider your goals, your time horizon, and your risk appetite. You have to know how you benefit. You benefit from investments across different categories of the mutual fund, and it can help improve your returns. You utilize dollar cost averaging, as I just mentioned, to ensure that you mitigate the impact of short-term market fluctuations. And you can utilize salary deductions, standing orders, and even ACH transfers to ensure you're consistently investing. And again, you have to review your portfolio to ensure you will get the help you need to attain your goals. So now, how do you get started with GK Mutual Funds? We need a valid government ID. It's a passport, driver's license, or even your voter's ID. We need a T.R.N. We need a proof of address, which is a bill in your name, no older than 3 months. We need a proof of income, right? That could be your last 3 months payslip or even a job letter. We need source of wealth, which is an example, which is a bank statement, and we need 2 character references. And as Jermaine said earlier, you can't really open an account nowadays without any references, right? So we know we have these references on call in our phone books. So getting started with us is very, very easy. So, guys, do you have any questions for me right now?
Right. Thank you so much, Hakeem, for that presentation. So we're going to take some questions. I say we have some started already. So we'll take the ones that were sent previously, and then we'll just go through. But I think we have another giveaway. Do we do the giveaway first?
The
giveaway first.
All right, okay, let's do the giveaway after.
Okay, let's take some questions first. So I'll take the first one. How volatile are mutual funds? Hakeem, I'll let you answer that one.
All right, so Stephen, when it comes down to the volatility of mutual funds, if you were to rate it on a scale of 1 to 10, it is easily a 3 because of how diversified the portfolio is. You're not going to be open to much volatility unless there's a major shift in the market.
All right. Next one. All right, Craig is asking, how do you treat with particular stocks that pose moral or ethical issue to the investor? Craig, is that for me or is that for GK? All right, because I can answer that, but let me know who the question is for, right? Because I know me and Hakeem would give different responses for that, right? So let's hold that one until Craig confirms who it's for. Lilia. Hopefully we pronounced that correctly. How did pandemic affect mutual funds? I'm talking in terms of volatility. So I think, further to what Hakeem just mentioned, it's really going to be looking at the underlying assets of the fund itself, right? So how did those assets perform based on the pandemic? So Hakeem, is there anything specific? I mean, the GK mutual fund started this year, so I don't think the pandemic would have impacted their fund specifically. But I don't know if there's anything else you want to add to that.
Well, I can simply add, based on the performance of mutual funds and unit trusts right across Jamaica, is that the pandemic affected the funds that were deeply invested in equity-based products, because as we know, the equity market took a huge downturn. So that affected those mutual funds. But for the ones who are actually in for fixed income securities that may have repos and so on, they perform same way and even higher because of increase in interest rates.
Okay. So that's the one where, okay. so Greg is saying both of us.
Yeah.
All right. So, I mean, I think we for us, can you put back the question, please?
Mhm.
So the stocks that pose moral or ethical issues. So for us here at Learn Grow Invest, we specifically, we have two stocks that we say that we don't, we don't review, we don't recommend, we don't do any form of coverage on, and that's based on what we believe those companies stand for in terms of moral for the country and so on. That would be SVL and Carreras for obvious reasons. But again, that's Learn, Grow, Invest. I'll allow Akeem to answer based on since the question was posed to him as well.
All right. So when it comes on to those stocks, it's actually based on the fund manager's research and the analysts that work with us. So some of them might be in the portfolio, some of them might not be in the portfolio, but it's not something that is going to be affecting you, right? So I know you're going to want the knowledge of it is if it is in the portfolio or not, but it changes from time to time. We can actually buy a stock today and hold it for 2 weeks and then liquidate our position based on news that we hear or based on the research that we find, right? So to be honest, you will not really know if it is in the portfolio or not.
I was gonna ask if there's a way to know what, because it's not like, are you gonna present like a list of stocks? These are what we're invested in. I don't think that's possible to get.
Right? All right. So because it's always changing, we always put the top 5 holdings based on a percentage. Okay. So if something is being with, for example, 0.5% of the portfolio, you wouldn't really get that listing.
Okay. All right. How long has Grace been in the investment business? Okay, so go ahead. That one is for you.
All right. So for the mutual funds, we actually started in March of this year. But when it comes down to the investment business, we've been around from 2013 from GK Capital Management.
Okay. What is the average rate of return for GK? So I think that one needs to be a little bit more specific. Is it, I mean, the mutual fund returns year to date that was shared on a previous slide. So if you just joined, you can just go back to the recording. Or at the time this was asked, maybe it wasn't covered as yet. But that should cover that one. How often should one make a deposit? I think you had alluded to that already. Yes. So the recommendation from us, LGI, and the recommendation from Akeem as well said, you want to invest as often as possible, right? So once you've chosen an investment, you want to add to that position so that the size of the investment is enough where the returns are also sizable, right? So once you've chosen a form of investment, then you want to ensure that you're investing monthly, quarterly, and so on as often as you can, right? Is it possible to invest in these mutual funds with another broker? So I guess how I'll phrase that question is, can you invest in specifically what GK is invested in? Because that's how I read that question, right? So I'll give that one to you, Akeem.
All right, so these funds are exclusive to GK, right? But if you're asking if you can invest in the similar type funds at other brokers, it is possible.
Okay. All right, how do I buy? Okay, that's a GK question again. I can just go ahead.
How do I buy into GK's financial instrument portfolios? So you're actually asking how to buy into our mutual fund, or are you asking how to buy the specific assets within the mutual funds? So if, for example, if it's to buy the mutual funds, it's simply, we can create an account. You can actually call me, call the office, or call any of the advisors. We have set up a meeting with your account open, and we get the ball rolling. It's very simple.
Okay. I believe there's a link as well. I'll ask our producer to share that link again where you can essentially fill out that form and someone from GK will contact you. It's a very short form. I think 3 or 4 fields. You fill it out, somebody from GK will call you to talk about how to open your account and all of that.
Is the US fund linked to FATCA? Yes.
Okay, because I didn't know the answer to that.
We are actually located at 58 Hope Road, Kingston 6, right beside Bob Marley Museum.
He says right beside. Is it right beside? Or so after you pass the museum, you take the
left, which is the Mayfield Close, right?
Because it's not right beside, right? So
yeah.
Okay, so I think I can answer that one. So so 2 things, right? So remember, Hakeem covered how to maximize returns, right? And that's going to be important to note. So for any investment, so think about this, Carleen. Let's say that you open the account with $15,000 and you never add anything else. And let's say you wait 5 years, 10 years, even if that account does, let's say, 50% or 100%, all that would mean is that you have $30,000. But if you add the minimum, I think is $1,500 every month for 10 years, your additional capital means that now if all of that money should grow by 50% or 100%, then you have a much more sizable return than if you left it with $15,000, right? So think about it that way. The larger the capital base, the more the returns on the investment.
Yes.
So the percentage return would be the same regardless of the amount, but the more capital you add, the greater your tangible return.
Yes.
Do you need the name and contact info of the character references or a character reference letter?
I would say, Nadine, it's actually the name and the contact info. We do not need a letter.
So usually you just give name and number. So for example, Jeremy McDonald, my phone number, they'll call me, verify that I know you.
Yes.
Yeah. Sanjay is asking, after opening an account, can we buy any of the bonds that were issued in March of this year? So I think what Sanjay might be asking, so if you're buying a mutual fund, Sanjay, what you're buying is the fund. Whatever is bought within that fund, GK manages that. If you want to buy bonds separately, then you can have your GK Capital investment account and you can buy those type of assets separately. But if you're buying into a particular fund, then that is up to the fund manager to determine what is bought. All right, okay. That's for you. Can you speak on the fees and so associated with this product?
So, Kerry, I was actually waiting for this question. So, the management fees for across the 3 funds is 1.75% for both Jamaican funds and 1.5% for the US fund.
Okay. And this is for you. What is the difference between mutual funds and unit trusts? Good question. Because I was going to ask you that question as well.
To be honest, guys, it's technically the same thing when you look at how it actually is structured. Being pooled to buy assets and returns are passed on to mutual fund holders and unit trust holders. It's technically the same thing.
Okay. I know you said we can start with 15K. How much would you recommend investing for a good return? So Tamika, as we said before, the return percentage will be the same regardless of how much you add. But think about it this way. If you have $15,000, you get 20%. That's $3,000, right? But if you put in $150,000, 20% is $30,000. Same percentage return, but the more money you have invested, the larger the cash you get back. So the percentage return will be the same regardless. But how much money you get back is dependent on how much you put in. And since none of us have like $1 million sitting down, not likely. But if we add $10,000 per month over 10 years, we would have added $1 million or more to that fund.
Definitely.
Right? So what are equity-based products? Please give examples. I think you might have referred to that on your slide.
Yes, I did. So for example of equity-based products, we're looking at stocks, right? So pretty much is you actually owning a piece of a company, right? As Jeremy will always mention, it comes down to stocks. That is the equity-based products. So for example, you're looking at NCB, you're looking at GK, you're looking at Proven, you're looking at a lot of Jamaica Brothers, so on the stock market. So it's pretty much you having a position so that you're exposed to growth over time, right? Because you don't want to be so locked into one investment instrument where your portfolio is not diversified. So you have those options as equity-based products, or even unit trusts and mutual funds that are actually investing in these types of products.
All right. Is your investment protected in case of something bad happening? Great. You know, I love my community. These questions are awesome. Is your investment protected in case of something bad happening? Can speak to that.
All right. So it is an FSC approved investment scheme. So we do have things to protect our investors.
So what I will say, there is no risk-free investment,
Definitely.
right? So bear that in mind. We should be mindful. So I know there's an incident that everybody has top of mind. That incident was fraud. Fraud is separate from the general risk that comes with investments. Two different things, just something to think about, right?
Yes.
I think what we can do after this question, let's do another giveaway, because I think persons in the chat are waiting for the next giveaway. So we can do a giveaway and then we finish out the questions and then we do the final giveaway. So how much would you recommend investing initially for a decent return? So Sashi, I think Tamika's question is similar. Start with whatever you can afford. So if you want to go ahead with mutual funds, if you have the minimum amount, start there, but understand that the more you invest, the greater the monetary return that you receive. The percentage return is going to be the same regardless of how much you invest, but the more you invest, the better the potential return.
Yes.
All right, so let's do a giveaway right now. So the next question is, it's going to load in a second. All right, so the next question is, name 2 steps in maximizing your returns for investments using mutual funds. Great question. I like that one.
Good.
Switching on music as well. Awesome. All right, so we have a winner here. So Damsels Catering, I believe you are correct based on what we have here on the screen. So have a question for you though. Did you register before this class? So please let us know. If you have not registered, then unfortunately we'll have to choose the next correct answer. So tell us the name that you registered on, a name, so that we can confirm on our registration list. So we'll wait for you to respond. We'll give you a minute to respond though. Okay, so tell us the name that you registered under so we can confirm. Okay, all right, so 1 second, we'll confirm. So we'll move on to the rest of the questions. Okay, all right, producer says we're good to go. So congratulations, Damali.
So we will send an email to the email address that you registered with the details on how you can collect. All right. So we'll take the next question now.
Yes.
All right. Kylie's asking if I should invest a minimum of 15,000. What would my monthly fee look like? Is that my decision or is it a percentage of my initial investment? All right. So are the fees monthly, quarterly, yearly? How do the fee structure
So the fee is
work?
actually annually.
Okay.
And it's actually taken out on the back end. So you will not see the fee coming out of your initial deposit any at all.
Okay. All right, Kylie. Hopefully that answers the question. So I guess so the fee is paid once per year. So whatever the value of the fund is at that point, or so let's say when I log into my account or you send me my statement, the balance that I see would be after the fee, or do I see the fee on the statement and then the balance?
You won't see the fee on the statement any at all.
Okay.
So it's actually taken from the fund in general, not directly from the investor.
Okay. All right. Tamika said, final question. What's the longest you can hold a portfolio for?
You want to answer? You want me to answer?
Well, I think that one's for
Well,
you.
Tamika, what's the longest you can hold a portfolio for? To be honest, forever. As long as the company is still standing and the fund is still there, you can hold the portfolio forever and it can be passed on to family members.
All right. So what I would say to that, Tamika, since he said that, I'll just say be sure if you're holding it forever, you have a will or something that directs it, right? Because depending on whatever the law may dictate, you want to be explicit as to how your investments are passed down. So that's the only thing that I would add to that.
And also don't be afraid to have a joint holder on your account.
Yes. All right. If you do not live in Jamaica, do GK reps do video phone calls?
Yes, we do.
All right.
Yes, we do.
Can you fund the account with a credit card? Interesting. That one is for you.
All right. So the answer is actually no. We do not take funding from credit cards for any investment account.
Okay. All right. Steven says, given that the office location is Kingston, would there be any reason to go to the office, or can the issues be addressed over the phone? So issues, I'm sure, can be addressed over the phone or via online or email. I mean, that's the kind of thing. You don't have to go in the office for an issue, but I'll ask you, Akeem, do you need to go into the office to open the account?
No, your rep is willing to come to you. So we like to have that relationship with you, because as your advisor, I want you to see us as your friend as well. So we're going to have conversations, and we could come to you where you're comfortable to ensure that your goals can be well thought out and executed.
All right. Carlene is asking, well, I think that answers the same question. So you don't have to go in, somebody will go to you. And of course, you can fund your account through transfer, I'm sure.
So it transfers to our accounts because we do not take physical cash.
How much does compound interest factor into this investment instrument? I'll give you that one, Akeem.
All right. So the NAV is published daily, which is actually net asset value, means in the price change daily. So if you're consistently investing and the price is continuously climbing, you're going to be benefiting from compounding interest. So for example, if you were to invest and the unit price is $100 today, and you put in $10,000, and then next month it's not $100 per unit, it's now $105 per unit, your second investment will go in at $105, and then it just continues going. So it's constantly compounding based on the amount that you invest and the price that you invest at.
All right. Hopefully that helps out here. Let us know if you want any further explanation. What does fund maturity mean? That's from Elizabeth.
All right. So fund maturity simply relates to the period it becomes tax exempt. So mutual funds don't mature is that when you reach that tax exempt period of 5 years. The only thing that may mature is the securities in the fund, and then we actually reinvest the funds to continue to grow for all our clients.
All right. Can you have your portfolio mix of all GK funds, and would the GK advisor be able to guide this process? Again, based on how the funds are constructed, the funds have very specific assets that make them up. You can't have a custom fund, right? So, in this case, having a fund of the mix of all the GK funds, I don't think would be possible. The different funds were stated. Are there other funds that you didn't state?
Not at the moment.
Okay. So the ones that were shared, those are the options that you have. So that would be what you're able to invest in on the mutual fund side. But bear in mind, you can have a GK Capital Markets account to invest in other types of securities.
Yes.
All right, this is mutual fund is locked into Jamaican companies only. So there were multiple options shared, Crazy Mug. So you can, there's a USD one, there's a JMD one. So there were options there that were shared. So it's not only Jamaican companies or even stocks that it's built on only. There were the different funds that were there. Again, just go back maybe about 30 minutes into the recording. The different options were there. And he also shared the composition, the top 5 assets, and how the fund would have performed year to date. Omar is asking, what is FATCA? Good question, because that is my chance to learn something.
All right, so when it comes down to FATCA, it's pretty much for your information and your investments to be actually properly accounted for. So because we actually invest in the US dollars, persons might reside in different countries. So we have to ensure that we have to have the proper accounting process and recording process and auditing process for everybody who is actually in the fund.
All right. Can religious organizations or churches buy mutual funds? I'll leave that one for you.
Yes, Omar.
I love all of these questions that were being asked, really good.
Very simple.
Okay, so you made it sound very simple, easy, clear to sign up. I'm residing overseas. What are my must-haves? So the application process will be the same, even if you're overseas. Once you have all the items that are required, you can apply even if you're overseas, because once they validate your identity, get all of the information, then you can open the account.
But there's one thing that I have to make clear is that based on the country that you're residing in, it might pose some issues in opening the account.
So in this case, I'm assuming they're in the US, but Crazy Mugs, you can confirm. But this is the perfect type of question to reach out to GK and say, well, this is my situation. Can I open the account?
Yeah, because everybody's situation is unique. And as you guys know how the financial sector is right now when it comes down to fraud and so on, once the person is residing outside of Jamaica, they're automatically categorized as high risk. So,
all right, they said that they're located in Cayman. Would that pose a challenge?
No.
Okay, perfect. All right. Will the laws conflict with who has access or receive payment if the account holder dies? How many investors are US citizens and from other countries?
All right. So will the law conflict with who has access?
So I guess if I pass away, would it automatically go to my wife? Or if I don't have a wife, would it automatically go to my child? I think this is where I was saying earlier to Tamika, I would have a will, right? Because the process may not be smooth if it's not explicitly stated, but of course, Akeem can verify how that would work.
All right. So when it comes on to the entire investment space, if you were to be investing and nobody knows about the account, it's not left in any will, there's a 99% chance that the account will stay there after you die and nobody has access to it, right? So it is recommending that somebody knows about the account, you have a will, you have a joint holder, and so on. How many investors that we have are US citizens and from other countries? We do have some clients who are from other countries, but for US citizens, it is a bit tricky when it comes down to the onboarding process, but we do have some.
Okay. are the funds that was shared. Okay, so I think maybe about the 40-minute mark, you'll see them. So that would be the best thing to do, to go through the video. He went through them step by step.
All right. Can you open an account for your child? It is possible to open an account for the child once the child has an identification, and also a T.R.N. The proof of address will be used as from parents and also the source of funds.
All right, so we have done a video on that, how to open an investment account for your child here on this YouTube channel. So be sure to check that out. Yes, Lenworth, it can be via any bank. They'll give you the account to transfer to, send it from any bank.
Yes.
I believe our last question is from Artist. If I open an account with the initial 15,000, I can only invest $10,000 per month or $5,000 per fortnight, would that be a problem? I'm sure that wouldn't be a problem.
It would not be a problem.
Once it exceeds the minimum of the 1,500, right?
Yes. But there's one thing that I have to mention is that when it comes down to opening an investment account, we ask for your anticipated level of activity for the year. So once you're within that anticipated amount, you're totally fine.
Okay.
But once you're across that amount for the year, we're going to ask questions.
So what you should do in that case, if you're planning to add $10,000 per month, just say to them, I expect to add 120,000 for the year, and then you should be fine.
Yes.
But if you show up tomorrow with $500,000, they're gonna say, well, we need to talk to you about it.
Yeah, we're going to need source of wealth for that one.
Okay. All right, so it's time for the final giveaway. I know that's why everyone is here. I just want to thank everybody for staying with us throughout the whole time. Remember, there is a link in the description to reach out to GK directly. Usually after the classes, we say if you have any questions, direct them to our partner, because that way the bottleneck won't be us, right? So we don't want to stand in the way of you getting any information. So use the link in the description. It's a short form, 4 or 5 fields. You enter those details, somebody will reach out to you.
Yes.
All right, so we'll take the final question now. Well, this is not not one of the questions, but we'll take this. Will GK looking to managing investments in college savings? Does GK offer investments in gold and metals?
All right, so for gold and metals, we don't do commodities any at all. But if you're asking if we are looking to do investments that gear towards like education, well, not at the moment, but it is actually in the pipeline. But you can use any one of our funds geared towards that. So it's really determined on your goal, and we'll come up with a strategy to execute that goal using the funds available.
Yeah. So essentially going and say, GK, I want to save for my child's education. What's the best investment? The child is 3 now. It's in 15 years. What should I invest in?
Definitely.
All right. We're ready. All right. So the question is, what was the launch date, that is the month or year, of the mutual funds in Jamaica, and the year-to-date performance of the JMD money market fund? Wow, that's a hard question. Wow. So Kerry, well, Jody answered first, but it's a 2-part question, guys.
2 parts.
2-part question. So, okay, I think everybody is doing the first part. Read the entire question, guys. So there's a part that says, what's the year-to-date performance of the JMD money market fund? And I think we may need to tweak this giveaway because it might be too hard to remember the percentage. But let's see if somebody gets it.
Well, somebody got it.
Somebody is correct? Is it?
And
Okay.
We found our winner.
So Sasha, congratulations. You are the closest, right? Because the year to date is 4.68 and you have 4.7. So Sasha, question for you. Did you register for this class? If yes, just let us know. Well, we're hoping that you registered under your name, but please confirm that you did in fact register. If not, we'll give it to the next person. Thank you, Ingrid. Okay, perfect. All right, so Sasha is our third winner. So congratulations,
Sasha,
to all our winners. We are happy that we're able to make this process a little bit easier to start because it would have been a gift from GK. So thank you so much for that. So I believe I'll just pause here for any other question, and then I'll just close out by just doing a reminder to sign up for the L.E.A.R.N Grow Invest Academy. So we have on their courses, our coaching program, or Grow Your Wealth conference from last year. So you can sign up there, and anytime we publish a course or a free class or anything like that, it'll be on the academy. So be sure to check that out. And of course, I want to invite you to join our community. So join our Telegram group. The link is in, well, I'm going to ask the producer again to share that link. Our community is free to join. You can ask us any questions that you wish about investing, how to manage your money. We have a real estate group. We have a US stock market group. We have a JSE stock market group. We have a general discussion group. We have so much information there to help you. I also encourage you to join our mailing list. And that way we send out emails and stuff that will help you grow as an investor. So I want to, as well, I think Akeem wanted to close out with something. Okay. All right. So 1 second here.
So guys, the information is here where you can actually contact representatives of GK, right? So you have a member who is Derek Harrison, right? His email and contact number is right there. You have Craig Campbell. His email and his number is right there. And then myself, Hakeem Dawkins, my email and my contact number is there. You can send us an email. You can give us a call. You can send us a WhatsApp message. Any questions that you have, and we're willing to answer them. So thank you for having us.
All right. Thank you, Hakeem, as well. And thank you to the GK team. Stephen, you are very welcome. This is why we do it, so that you can learn and make a wise investment decision. So we thank you for joining us. All right, I believe that's it. If anybody is watching on the replay, again, the link to contact GK is in the description. If you missed the whole video, don't worry. The video will be here forever, so you can watch it. Feel free to watch a replay at your own pace. And let me see here. Roshana is asking a question here. I think we'll take this before we go. Sorry about that, producer. Has there been any great impact on the return rate because of the US inflation rise?
Okay, there's a simple answer and there's a complex answer. All right, so the simple answer is no. But the more complex answer is that because we actually invest in US Treasury bills and the constant increase of the US inflation, it is impacting the fund, but on a minuscule level, because we're actually using these instruments to hedge against inflation. So what we're getting on these funds are actually higher than the current rate of inflation in the US.
Okay. Hopefully that helps. All right, guys, thank you so much. I really want to just say thank you to everybody who joined. If you have not subscribed to our channel as yet, be sure to subscribe. We do free content like this every quarter. There's a class coming up again in a few months, absolutely free. So you can learn more about how to make wise investment decisions. The coaching programs, Sashi, hopefully I'm pronouncing that correctly, will be launched in January. So just subscribe to our mailing list and we'll notify you, sign up for our academy, and you'll know as well. You could actually go to our website, pay for the coaching program now, and as soon as it starts, we'll notify you via email. So you can do that as well. But the planned start date
is January 2024. So just under 2 months. All right, everyone. Thank you so much again. We'll see you in the next video that we have.
Thank you, everyone.